Assalamualaikum and hello! So today in this video we are going to introduce to you about the accounting for receivable. Please sit back and enjoy.
Oh my god! Miss Akida, come here! Come here, I have bad news!
Oh yes boss, what is it?
Do you remember one of our debtors, Redha Sisters? I just found out she's bankrupt.
So it looks like we have to close the account because that company is our bad debts.
That scenario shows that the account receivable are confirmed not being able to pay the debt. Some situations that meant the debtor could not be able to pay the debt are bankruptcy, gone missing, and died. The debt that are not paid is called bad debts. We treat bad debt as expenses and we consider it as a loss to the business. The nature of expenses is debit. Hence, the journal entry for this transaction is we debit allowance for doubtful debt AFDD and we credit account receivable. So, when Beda Enterprise found bankrupt, the accountant of Redha Enterprise will open the account of AFDD and account receivable control in general ledger, and she will debit AFDD and credit account receivable control following the double entry system. Meanwhile, in subsidiary ledger, she will debit AFDD then credit AR Beda Enterprise. We could see here we don't have bad debt account, but we open the account as allowance for doubtful debt AFDD. Meanwhile, we credit account receivable because the debtors are unable to pay the debt and their account receivable account are going to be cancelled off or removed from the business record. At the end of the financial year, the asset account receivable is shown in the statement of financial position after the bad debt is deducted from outstanding balance of the receivable.
Come in. Boss, someone wants to see you.
Who?
Hello, Miss Director. I want to pay my debt. Don't worry, I'm rich now.
Accounting for bad debts recovery happened when a debtor who was written off as a bad debt pay back the amount. When debtors pay the amount that was written off as a bad debt, the following journal entries are recorded. You need to debit account receivable and credit allowance for doubtful debt AFDD and then debit cash or bank and credit account receivable. We credited AR because we need to open back AR that have been closed because it's bad debts written off earlier, and we debited AFDD because we need to take the amount that have been recorded as a bad debt earlier.
Boss, I believe it is the right time for us to open allowance for doubtful debts account.
Have the finance department do analyzation for doubtful debts?
Yes boss.
Good. Let's move.
Next is accounting for allowance for doubtful debt. The business needs to provide an estimated figure for doubtful debt if the business is not sure how much the account receivable will become bad debt. This practice complies with the concept of prudence to avoid overstating the asset. The allowance for doubtful debts can be calculated based on the experience or management of the history of account receivable. An aging schedule can be prepared by looking at the duration or time period that debtors will likely to take to pay. To provide the allowance for the first time, we need to debit doubtful debts and credit AFD. For the next accounting period, if the allowance is increased, we need to debit the amount doubtful debt that is increased and credit the amount AFDD that is increased. If the allowance is decreased or reduced, we need to debit the amount of AFDD that is decreased and credit the amount of doubtful debt that is decreased. This is in the case where the real amount of bad debt is decreasing after many years. In the statement of financial position, the account receivable and AFDD will appear as follows. Okay, next, contra entry. What is contra entry? Contra entry is happen because sometimes the same person is a debtor as well as a creditor of a business. The amount he or she owes can be cancelled in account receivable and account payable by debiting accounts payable and crediting accounts receivable. Let me show you the example of situation for contra entry. I'm not showing you part of the situation in the drama, but this is just for example. Okay, let's say on 21 August 20x1 sold inventories to Beda Enterprise on credit 1000 and purchased inventories on credit 1000 to Beda Enterprise. Means Beda Enterprise is our account receivable and also our account payable. In the ledger, it will become like this.
Boss, we didn't receive any money from Beda Enterprise. It might be this on the check.
What? Wait a minute. Why is the number different than the word?
It's okay. I will call the bank.
Based on the scenario, the check is not accepted by the bank. Why? Usually due to certain reasons such as insufficient amount, the digit and the numeral written in the check is not the same, no authorized signature, or the check is expired. In this case, the check digits and the numeral written is not the same. Hence, we record this in account receivable control and cash book by debiting account receivable control and crediting bank as dishonored check.
Promissory note. Promissory note is a note or a document issued by the receivable when they promise to pay the amount due by a stated date. This is one of the examples of the promissory note.